All right, guys. Welcome to our first market sector spotlight. I'm going to use a couple of different tools here. One is Yahoo Finance, which I'm trying to find right now. There we go. And the other is Thinkorswim. So review the tech workshop. Get your Thinkorswim paper trading account set up. This week we're looking at equity indexes. It's so exciting. You can't wait. And it's ironic because when I go to Yahoo Finance, right at the top of the screen here, there are three items: the S&P 500, the Dow 30, and the NASDAQ. And these are equity indexes. So these are instruments, financial instruments that you're going to be trading and investing in all the time. They are very frequently used. So the other tool we're going to look at is Thinkorswim. And once you've got logged into Thinkorswim, just head in these tabs across the top, just head over to the charts tab. There we go. And once you're in the charts tab, go ahead and in this little box here on the left, type in SPY. And it should, if you just hit enter on your keyboard, assuming my computer is working, there we go, you should get a chart pop up. We want to make sure this chart shows us a year's worth of data. So if you look over kind of on the right hand side, there are some menu items here. There's one right between the cogwheel and style. If you click it, it opens up and it shows you different time periods. We're looking for one that says 1Y:D. So that's 1 year, 1 day at a time. That's what you want to see. If for some reason you don't see that, go back to that one with the time periods on it. Go to Customize List. Here, go to Add a time frame and do 1 year, day, and add it in, and then switch to it. But it should be there, okay? So 1 year, day. Risk of Googling in front of you, we're going to take a look at these. There are, four main equity indexes that we want to take a look at. And in short, I love the fact that it shows Donald Trump here. He's everywhere. But anyway, in short, an equity index is a financial instrument that represents a collection or a basket of different companies' stocks. And they have different purposes. The big daddy of them all is the S&P 500. The S&P 500 is what's called a large cap index, and it contains or it tracks the value of the 500 largest companies in the U.S. So if you go to Google Finance, type in SPY at the top, this will take you to what's called an ETF. Which we'll go into in more detail in the course, but this will bring you to the ETF for the S&P 500. And you'll see just some of the stocks here that are involved in it: Apple, Microsoft, Exxon, Johnson & Johnson, JP Morgan. These are big old companies, okay? If you go to, I think it is the profile tab. Here it says this investment seeks to provide investment results, blah, 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 performance of the S&P 500 index. So the top 500 stocks. Now, you can, the idea of an index is kind of twofold. Number one, it's just a measure. It's a metric of the market to say what's happening with the market in general. Let's switch back to Thinkorswim. Here I've got SPY up. Now, what would you say the market has done over the last year? And therefore, what has the economy done? Well, I mean, yeah, it is an ebb and flow to it, right? But in general, it's gone up, right, over the past year. You can change these time frames up here. If I were to go to this one and go to, say, here I have one that's 3 years. Do I have anything more than that? I don't. I have 3 years. So I would say, this, like, look at this year here, not much, pretty flat. This year, a little up. This year, it's choppy, but it went up, right? S&P 500 also kind of generally represents the sort of health of the U.S. economy as well. Now, that's number one. Is this? It's a metric, a measure of what's happening with these companies and with the country. The other is it's a vehicle to get a little piece, invest in a little piece of all of these companies. It used to be back in the day, it would be considered a way to diversify. You know, you would say that, well, rather than buying, you know, IBM, let's say, tends to follow the market. But there are situations where, you know, IBM, something might go wrong and the price goes down. Well, rather than buying IBM, just buy some shares in the S&P 500, and rather than being exposed to a single company that you never know what's going to happen, you're going to be exposed to a little piece of 500 different companies. If you think about it, you know, what are the chances of them all going down at the same time? Well, it turns out that the chance of them all going down at the same time is actually pretty high, because major stocks are very what's called correlated to each other, which we'll talk about a lot in this course, correlation. But it still provides a certain amount of diversity to it, in that you don't have this risk of something going wrong with one company. Something goes wrong with one of the companies in the SP 500, it's only affecting, you know, a small portion of that index. So rather than, say, going out and buying one share of 500 stocks, you can actually just go and buy the S&P. You can do that. You can come into Thinkorswim, type in SPY, go to the trade tab, type in SPY, and if you wanted to buy a share of the S&P 500, if you remember, you buy on the ask, sell on the bid. So you would just come here, click this this ask price, choose how many stocks you want to buy, click confirm and send, and you would buy into the S&P 500. And if you look at the supporting videos for this week, one of them is the John Oliver special about financial advisors. He talks about what we should really be doing is just buying low-cost index funds. Well, that's exactly what the ticker symbol SPY is. It's an ETF, which stands for Exchange Traded Fund, which essentially means it is a fund, a basket of different investments, in this case, the 500 largest companies in the U.S., but it's traded. It's traded on an exchange, so you can actually buy it or you can sell it. You can also, what I would strongly recommend is sell puts in it to take advantage of that general upward drift in the market. So SPY is the main vehicle for that. It's $227 a share, so it's fairly pricey. It's up there, but there are some other ways that you can get exposure to this without spending sort of $20,000 for a lot. However, if you do have a larger account, this is one of the things we'll talk about in this course. The more money you have, the better your life is, I'm telling you. Like, so if you type in SPX instead, SPX is also an ETF for the S&P 500. It is it's a pure index, which means that you cannot buy it, but you can sell options or buy options on it. But it's approximately 10 times the size to $2,274 a share instead of, let's go back to SPY, $2,027 a share. Now, why is it better? Why is why is this better than the other one? Well, if you think about it, let's say you had millions of dollars in your investment account. That'd be the great time. But let's just say you did, and you wanted to sell a bunch of puts in SPY to take advantage of the upward drift. You might have to buy, sell 100 put contracts. Well, each contract that you sell has a transaction fee associated with it, right? So rather than selling 100 puts in SPY, you could sell 10 puts in SPX. Therefore, less transaction costs. So that's the benefit of going to a larger index. There's an even larger one again if you type in /ES. This is the E-mini S&P Future Index. And this is larger again. You're talking hundreds of thousands of dollars here in a single trade. And excuse me, this one, not only you'd probably only need to sell one put in here, low transaction costs. Not only that, but futures are taxed at a lower rate than regular regular stocks are. So the downside is you need a ton of cash to trade futures. But if you have a ton of cash, you pay less tax. Skewed system, maybe? Well, that's for you to decide. But anyway, essentially, the more money you have, the better your life is when it comes to investing. It's not just about having more money, it's about the advantages that come with that, with being able to trade larger objects. So that's the S&P 500. SPY, you'll sometimes hear it referred to as the spiders. That's, in fact, if you go to the chart of SPY, they still have it. Oh, they used to have it on. There used to be a little spider in the top left-hand corner. I guess it's not there anymore. But anyway, the spiders, we'll look at that one a lot. In fact, we'll be comparing our portfolio to that a lot. All right, let's go back to Yahoo Finance. Let's look at the other one. Come on, catch up with me, Yahoo Finance. There we go. So that was the S&P 500. Then there's the Dow. The Dow 30. Excuse me. I apologize for coughing all the time. So here's the Dow. These are the stocks that make up the Dow. Has a very similar kind of layout to it to the S&P 500. It's just that it's smaller. It only has 30 stocks in it. The Dow 30. So that's as you would expect. Only has 30 stocks. If you wanted to invest in the Dow, that is, the ticker symbol for that would be DIA, for the Dow Jones Industrial Average. Trades at about $200 a stock, and as you can see, it's kind of similar to the SP 500. Right? If I go to SPY, just kind of burn that chart. Let me kind of draw on that. If I can find my pen, there it is. Let's see what we got here. We got a rough kind of goes like this. Flat for a little while. Whip down, up, and whoa! Trump got elected. Trump. Oh, now it's the end of the year. Okay, so let me go back to SPY, and we'll see. Yeah, look, it's very slightly higher, right? Bigger moves there, but more or less the same thing. So that is the Dow. Let's look at the NASDAQ. And we have some of the components of the NASDAQ. This is much larger, more like the SP 500. But again, it's just a basket of equity stocks. Basket of equities. And that's when we say stocks and equities, that's pretty much synonymous. Symbol for the NASDAQ, just to make it nice and confusing, is DIA. Excuse me, I did DIA already. QQQ. So what I meant to say on the Dow there was that the DIA is often referred to as the diamonds. That was what I was going to say there. So you've got the spiders, the diamonds, and then QQQ is the NASDAQ. And you'll just refer to as the Qs, okay? And you see, again, slightly different, but it's the same kind of general feel to it, right? The Qs. Now, the one that they don't have here in Yahoo Finance for whatever reason is the Russell. The Russell 2000 index. This has 2,000 equities in it, 2,000 stocks. We probably won't. We'll just see maybe a sampling. The reason it has so many is these are smaller companies, small cap stocks, the Russell. So the trade you'll want to do for that is IWM. IWM is the Russell, and you can see they're kind of similar again. IWM trades right around lower 100s. The Qs, I think they're around the same price. Yeah, 123. And then you've got the diamonds. They're up similar to the spiders. So spiders and the diamonds are a little bit larger than the others. I do tend to, for my index positions, personally for my account size, I tend to trade IWM because it's a little cheaper. But as I gain more money, I will definitely up to some of the larger products. Now, there are lots of other indexes and lots of other ETFs, but those are the big four. We're always going to be looking at those. The S&P 500, Dow Jones Industrial Average, the Russell, the small caps, and then the NASDAQ composite. So, and those are the main ones we're going to look at. So you want to get familiar with those. Just kind of, when I say familiar, just generally know about what the price is and kind of what they've been doing recently. Most of the time they're doing the same thing. So let's go SPY. It's right around 225. It's been flat recently. Let's go to the diamonds. It's right around 200 bucks. It's been flat recently. Let's go to the Qs. It's right around 125 bucks. It's had a little bit of a run up recently. And then the final one, IWM, the Russell, it's right around 140, and it's been flat recently. So that's just kind of general things that you want to watch. We'll be looking at these pretty much every day to see whether they've gone up or gone down. So that's your equity index minute. Check them out on Yahoo Finance if you want to see a little bit more detail on that. Yeah, we are going to be trading all of these indexes pretty frequently. So enjoy. There's your little equity index introduction.